There is a point at which property imbalances become overwhelming and they drown out everything else. And so tensions in upper income groups absolutely play a basic role in allowing anybody else to get a say sometimes. I often tell my students the French Revolution started effectively over the repudiation of the debt by the regime, which is true. There were a lot of other things going on. A bread riot plus a default by the state. In a multi-party system where the rules, somebody, if you have a big farmers block, that'll typically organize its own party. Then the business guys may in fact split. There may be one party's more closer to finance, say, than to the rest of industry. Often you get a free trade party and a protectionist party. And those are both industrial parties sometimes, with the banks typically and with the free traders, though not always. And if you got a free traders versus protectionists, then they're very likely to be two different parties. You can have conflict going on inside one party, but boy, is that often historically very difficult to manage. Classical theories of democracy way underestimate the costs facing ordinary voters as they actually try to control the state. You got to find out what it's doing, you got to sort through all the people telling you what your preferences are, and then you got to try to push it across in voting, and then you got to monitor what they actually do, if they live up in effect to their campaign promises, and if they don't, you then have to do something to force them back on the course. It's that last stage that's the hardest. That is to say, if the candidate doesn't do what you say, what exactly do you do? Well, try to get them next election? Maybe. Okay, so if ordinary voters can't easily afford those costs typically, then who can? The answer is rich people, businesses. Take a situation where everybody, by hypothesis, knows that the whole population, except for the business guys themselves, want unionization. But if it costs, say, $1,000 to campaign, and that's way beyond everybody's income, the ability to raise it, it doesn't matter how many people want it, or that everybody knows already that people, if you come out to them, they'll get it. It's that you can't reach anybody with the appeal because you can't raise the money. To this day, despite all the noise about small contributions, and particularly on the Obama campaign, which made a big pitch that they were small contribution driven, we now know they were not. They were encouraging their people to break their contributions into small bits, often $200, and contribute over and over. And the studies that initially started reporting about how they were small contributor driven, I know the data sources that they work on. Neither they nor the data sources have good enough matching programs to enable you to get the same person more than once unless everything is matched. That is to say, the junior, the address, you change a middle initial and stuff like that, you won't typically catch it. And so they just miss the repeated contributions by the same folks. They keep recording them as multiple contributions.
And when Obama did organize a large number of people, and many enthusiastic people, what's called in the press Obama's army, but the army is supposed to take instructions, not to implement, to introduce, develop programs and call on its own candidate to implement them.
Typically not less than 2/5 to 60% of your contributions are going to come in from people over $500 and often over 1,000. You could think of a modern campaign like modern war as effectively the equivalent of shooting a dealer display floor full of Mercedes-Benzes at somebody. That's a lot of dough. So you need to keep refilling with Mercedes-Benzes. And that's hard to do on small contributions. And the other side of it is, the two critical points is the voice is different between a few contributors and lots, and there is no easy follow-up. That's the really critical thing. For instance, you can give, a bunch of us can all, lots of people contributed to Obama. I know a lot of people who did. When they start to do things like, appoint, as they did, a former lobbyist for Goldman Sachs as a Treasury Secretary's Chief of Staff, there's nobody who can come in and say, hey, this is way wrong. But it happens in much party competition in most industrial states, and pre-industrial states for that matter, most of the time. That is, unless the population is actually organized in a fashion that allows them to sort of do this cheaply and easily. Then power is going to pass by default to blocks of investors. and they're effectively going to compete to control the state. So what you need is an analysis of competition within the business community. Now, this is competition with some real limits. I mean, it's not as though business communities compete to put themselves out of business. They don't offer higher and higher taxes on themselves. They don't offer medical care at their expense, and none of them offer unionization. But they will offer you something different. It's just historically people offering you public works or something, or often investment in education, which has become virtually a formula. And the reason it's a formula is precisely because that's something that benefits elites as well as ordinary people, at least those that get it. Republicans are different from Democrats not because they agree to be different to fool people, but because they're controlled by different blocks of businesses. And while they have a strong commonality of interests on many crucial dimensions, they also really differ. An awful lot of political coalitions in the United States, the condition for existing is that the national income not be failing. When that starts to fail, that forces industries out of whatever coalitions they're in into new groups because they've got to get something that works. This leads naturally to an approach to long-term political change. Look at the rise and fall of different business sectors over time and watch how they sort of come into political prominence and sometimes fall out of it as they get old and sometimes overwhelmed. And it's a particularly interesting way to think about the current financial crisis because, look, over the last 30 years, finance became absolutely the dominant sector in the American economy. It beat even high tech, I think, in the end, and it certainly beat out things like oil and gas. Control the state, they get to run policy. And if they get to run policy, well, what would you like? Would you like your bank to be saved by government forbearance? I mean, take that one right now. Does that sound pretty reasonable? That seems to be going on right now. I mean, Bernanke was a client of the banking system. And in the Depression, the Federal Reserve was a sort of captured arm of the banks. So in general, you may get to run foreign policy. You'll almost certainly get a tax law you'll like. You'll get labor laws you like. The real question is, what don't you get if you get to run the state?
In democracies, the elected officials are responsible to their own citizens and consider their interest to be paramount. That's the theory of democracy. A president, an elected official, represents the people who elected him. He doesn't represent somebody else. Now, if you have a problem with that, by all means, let me know.
In general, you'll get a block of issues that count to investors. That's often overseas. I mean, a lot of these folks care more about China policy and for instance, American China policy in the last 15 years was surely driven mostly by the desire of American investors, especially the investment houses, to get in there and manage money in the Chinese market than any consideration about American jobs. I mean, that's just all there is to it. Now, nobody is going to campaign on that. So in the public positions of the parties, in effect, each sort of carves out a kind of, quote, base for itself, which they keep sort of repeating a relatively simple formulaic set of things to appeal to that base. And you can see this in the voting data that Andrew Gilman gathered very clearly. After the late 80s, the Republicans stopped the appeals to race, moved to religion much more. And the way you did that was to sort of keep highlighting issues like abortion, the Schiavo, and all the rest of that stuff. You keep sort of manically concentrating on that in public, sort of building your base type stuff. The Democrats officially sort of aimed at women, various minorities. That's the sort of Tower of Babel you get in public. That's your mass politics. That's not the same thing as the stuff that makes investors contribute.
The public relations industry makes sure to keep issues in the margins and focus on personalities, character, and so on and so forth. They do that for good reasons. They look at public opinion studies, and they know perfectly well that on a host of major issues. Both parties are well to the right of the population.
What I walked through in the case of the Clinton, the essay on 1992, I looked at industries significantly above the mean in support of Clinton. Oil and gas, capital-intensive exporters, aircraft, computers, investment banking. That investment bankers keep showing over and over in the Democratic Party, going back to the New Deal.
My fellow Americans, after these 4 good, hard years, I still believe in a place called hope, a place called America.
In the 1996 elections, Tom Ferguson has pointed out that the election was to a large extent brought toward the end by the telecommunications industry, which poured a huge amount of money into it, enough to get Clinton elected, in fact.
96 thing really does look rather like 2000. Something like 3/4 of the business community was strongly anti-Clinton. I don't think that percentage changed that much. So you're in a situation where I'm going to stipulate 2/3 to 3/4 of the business community wants Bush. The hullabaloo if you elect Gore would be quite a lot. Some of the labor guys thought maybe we should have some marches to sort of protest this. They clearly were advised, don't do this. If the situation had been reversed and Gore had in fact, won 5-4, I think you would have seen almost chaotic scenes of the type where you had Republicans paying guys to go down into Florida and actually, demonstrate. The consensus candidate in the business community was winning. Throw the hand in and collect your tax cut too was, I think, the dominant sentiment. These guys weren't trying that hard. And Kerry clearly threw a hand in too fast on 2004. In the end, the business folks won't turn the place into a shambles. They'll take a shot at it, try, and if they lose, okay, we'll take our tax cut and we'll come back next year with more of the same.
Oh, see, I made Lewis a bet here. Lewis bet me that we couldn't both get rich and put y'all in the poorhouse at the same time. He didn't think we could do it. I won.
I lost. $1.
Thank you, Lewis.
After you.
Certainly.
Stock market prices actually reflect major investor knowledge of campaign contributions. We know that congressmen and senators earn the highest rates of return in recorded history on their portfolios, which means they're being given inside information. And that doesn't show in any campaign contribution. I had a colleague at the University of Texas. He did a paper called Death of a Congressman. What he quickly discovers is that if they die unexpectedly, the stocks of the companies they're close to crash that afternoon. That theme was picked up by some folks on Indonesia and Malaysia, where they looked at how the Asia crisis affected the stocks of, remember when Mahathir and his rival Anwar went down in Malaysia at Mahathir's hands, and it turned out the stocks of the companies that Anwar was close to crashed. They went down by something, my memory is about 23% in the space of a week or two. But that was what political patronage was worth in Malaysia. I looked at that paper and I said to my friend Joachim Folk, we could use this technique, which basically what you do is you estimate what the stock market's doing over about six months before or so. You try to sort of define a little event window, which is real tight. The idea is track what stocks do on average and then see if the ones that are politically connected or that you think might do better on average than that. And so we took that method over on probably the most famous argument about political money ever, which is the coming to power of Adolf Hitler. We worked this through, it took something like 3 or 4 years. And what we showed was like the last 25 years of American history and German history on this was all wrong. That in fact, big business in fact did fund Hitler, a big chunk of it, sort of somewhat loosely the classical Nuremberg hypothesis is really right. Steel companies, IG Farben, Siemens, things like that. Yeah, they were all into this. And their stocks do move hugely, excessively, excess returns, as they say. was Burnham who posed the question of what do the fluctuations in voter turnout over the course of American history mean? What you get is this stupendous rise in voter turnout from roughly 1824 to 1840. You go from 25% of the potential eligible electorate voting to like 90. And then at the end of the 19th century, you get a stupendous decline. Now, there's not much doubt what happens in the South to do that. It's poll taxes, literacy tests, registration requirements, and a huge amount of direct physical intimidation. If you're black and you try to vote, you might just get killed. Or Mexican American in Texas. The bigger puzzle was, hey, what's the rest of the United States doing with that stupendous decline after 1896? McGuire's study of the constitutions appeared where he actually did do the study, what you want to do with a computer. You actually put in the wealth holdings of the founding fathers and see how they voted, and he shows you plain as day there are very direct economic alignments in the Constitution. It's obvious as can be.
Those who own the country ought to govern it.
The people are nothing but a great beast.
Government ought to be so constituted as to protect the minority of the opulent against the majority.
The American colonies during the Revolution rewrote their state constitutions generally to give pretty easy suffrage. After the Constitution is passed, they take it back. They put the property suffrage requirements back on. Those come off in the Jacksonian Revolution. And the Jacksonians are definitely pushing that. That's because they think a deal like getting rid of the steamboat monopoly is something you can push. So I actually plot it, it's in my book, the concentration of wealth against the rise in voter turnout during the Jacksonian period. What the Jacksonian Revolution was about were these people paying to mobilize the rest of the citizenry. As these guys got more wealthier, got concentrated, they could pay more, and they did. Then the turnout decline is strongly associated with the spread of industrialization. 19th century economy, just about across the board, almost everything is hugely labor intensive.
A great technological revolution. We can and are producing a lot more with fewer people employed in certain manufacturing industries.
You know, this is a 20th century development. It's the science-based industries, especially when you go from coal to oil, and oil refining, chemicals, the electrical industry develops.
We know, too, that oil is power for our factories. The machine age, which has given us a matchless standard of living, would never have been possible without oil. Practically every metallic machine in the world would grind to a stop if it were not for petroleum lubricants. Yes, these are the more generally known miracles from oil. But let's look at some less familiar changes oil has wrought in your daily life.
The heart of the capital-intensive story basically boils to this. Imagine that you have all these businesses sitting in one group and labor starts to organize. Now, whose costs rise sharply fast? And the answer is it's the labor-intensive guys. I mean, or just in pure tech, if your wage bill is a big chunk of your value added and they start to unionize, you probably flip out. And so what that says is what in practical terms were usually older American industries, steel, textiles, eventually the auto industry, these are all use enormous masses of labor and they don't want to be unionized. I mean, this is not just a question of we don't like unions. This is going to cost us like immediately. It'll also show in their stock price. That was a very late realization for me and lots of other people.
The health care for retirees is dependent on General Motors stock. Now this means that my interest in health care is in conflict with the interest of an active worker. It may be in my best interest to close plants in the U.S., to cut wages in the U.S., so that I can get my health care. Well, damn it, I don't want it that way. I do not want it that way.
The real issue here boils down to, have you any possibility of making an accommodation in sort of electoral terms between business blocks and parts of the workforce?
Too bad. The men have always wanted to take a look at the president. But you come out here to settle the strike.
Well, if that's possible.
It's possible. Just negotiate.
As long as labor's power is relatively weak, it's quite possible that the more capital-intensive businesses will sit in the same party with them. Labor can get strong enough to drive them all out of the party. That actually happens. Much of European political history is exactly in that space. That just gives you a very simple line of thought here, where you can run on one axis the rising power of labor, and that just sets. Then you just put, the industries on the left axis going up. Effectively, what you're actually sort of showing there is the point at which it becomes impossible for an industry to support any Democrats. Let's just mark down on a chart who's mostly for Roosevelt. And I've noticed it's mostly capital-intensive industries. Above all, it was the oil industry. In 1936, that's where a great amount of Roosevelt money came from. On the one hand, the New Deal's the one case in American life where you get something like a European-style social democratic outcome. You actually get Social Security, unemployment compensation, the Wagner Act that sets up the National Labor Relations bargaining framework, a minimum wage. When did that stuff happen in the U.S.? All the things that they spent 50 years eroding, that was, pretty much a few years, all at once. On the one side, you get that sort of social democratic outcome. On the other side, look again, and you can see plenty of business guys backing the New Deal. Moreover, when you look closely, it's not socialism. Nobody is trying to take over American industry. In fact, they're sort of spending tons of money trying to resuscitate the banking system and the Reconstruction Finance Corporation and give it back to private bankers. Labor got a lot stronger in the New Deal, but it was still relatively weak by world standards of advanced industrial countries. There's no question, these are all businesses. They share pretty fully in the sort of conviction that private property ought to be pretty absolute. You can see that even in some of the responses to the healthcare debates. President Obama was talking at the Business Council, and he was asked by one of the large firm heads there about medical care. I noticed, hey, that's a relatively capital-intensive firm. And this guy was clearly railing on at the prospect of the one serious reform that would actually give you universal health care, which is you got to have a government-sponsored program that people can enter in competition with the existing private ones. That's the way you get some serious cost containment. Everybody knows that. That's why much of the healthcare debate that's about to happen is going to focus on it.
All right, this year, in 2008, something changed. For the first time, the Democrats began putting forward programs which are towards what the population has wanted for decades. They don't really get there, but at least they're in that direction. Well, what happened between 2004 and 2008? Public opinion didn't change. It's been pretty much the same for decades. What changed is that manufacturing industry started coming out in favor of a national healthcare system because they're being smashed by the costs of the privatized system in the United States. Like General Motors says it costs them over $1,000 more to produce a car in Detroit than across the Canadian border because they have a rational healthcare system, more rational, not perfect, but better. When a sector of concentrated American capital becomes interested in something, it starts to become politically possible and have political support. These are things that people ought to be discussing and think about. What does that tell you about functioning democracy?